E for MarketWizards.com and eMiniWizard.com, reminding traders to use risk capital you can afford to lose. And it's just after 1:30 on Saturday, the 23rd of September, 2023. All right, and as usual, this is for my own review. Anybody that's looking over my shoulder, a reminder, not for everybody. We all have our own distinct style and things we've learned along the way. And I'm just reviewing my own methodology because it helps me as a trader to better understand the techniques and processes that I use. So running through a couple of the more important charts from Friday. 2-day chart, we note that we just had a very minor break, about 5 points below the low on Thursday, and then we were bouncing. This was a chart posted early in the day. I had considered at the time, obviously, the first and most important thing is where we're going to go at this moment in time from this 921 area, which is in this box 53s to 14. So 14 was an important number all day long until we break the low or the high. And support that I was guessing at was already in the lower box. And I felt we could travel based on the distance of the prior day. If we got momentum, that we could certainly come back up and test 15. And that's what I anticipated. So support box, and then the probable fighting boxes with the 921 middle of that 82, and that it was an important idea near the gaps. And then obviously you got to break 41s, you got to take out the 61, and then up the ladder. And at the time, this was the battle zone right here, these two boxes. So those are some of the first charts that I put out and ideas that I was looking at. And as the day progressed, we can see just how that area held, that expected box that held. We had the 82 support, that was 88 lows. And then we got a push long side and right through these two boxes fast and up into obviously the top of the pipe. This is the pipe, the the gray and the blue area. And once we get here, theoretically, you spend 40% of your time in the pipe. This was our primary target zone, 39, the back end, paid for sure coming into 15. We had that 92 to 15. 92, you can see over here, obviously. And then paid for sure coming in and trying to bump this. We thought that would be the key, trying to bump these stops. And as it turns out, and you don't know until hindsight, as it turns out, that was all that could be done, was just a little bit overshoot on that end, just like a little bit overshoot on this end down here. So these major zones, I put the middle in, obviously right into the system. And then if I have some setups where they're not there, then I'll put another line which will show me the middle of those boxes. So that's what these boxes are for over here. And I'm just trying to help a few people that are trying to understand the methodology and the things that I am looking at. We had talked after this push, and this was that big launch contra, and this is where he said, geez, he is putting the 14s out there. And I said, if 8 breaks, because this is a level, this is the pipe in the intraday swing. So we had to push, we had a pullback, came into the slope line. Once we break the slope line, and we know we are into a falling stage, descending stage, and that's where we open up the door, obviously, to the next lows to be taken out or not. And nobody knows whether this heat is going to hold or not. And we also don't know on a bounce if we can get back up above the middle and challenge the 53s again. Nobody knows. So all you can do is protect yourself when it's running against you. Already have identified on my charts areas that I think that are important. Pay particular attention to this, to the settle and then the closes. So we know we have a range down here of say 50 to 60. And we get this bounce. We come down, we get this bounce. 2 o'clock, the lunch contra is over. We're into the afternoon session. We sit, we sit, we sit. And then 3 o'clock comes, and evidently, we never know the reason why, but evidently the weeklies, I'd said to the few guys I was trading with, the weekly shorts are going to cover. Now, it turned out they did, but probably the monthly traders never did, because we were unable to get back up and do any more damage above this level. And we count these levels: 1, 2, 3, 4. That's your middle. Level 5, level 6, level 7, level 8. Normally, that's going to be your resistance. That's going to be your support in whatever range we're describing. And we look at it step by step, each level. So at this point, I said, okay, use a 90 stop. We had that 92, right? If you'll remember from the other chart, that the 92 2-day middle. So let's use stop. Anybody who wants to take this trade, use a 90 stop, because now you're into a risk and reward situation. And if we come back down, then you're really looking for probably a scalp against this very hard drive up. And as the time starts to erode at the end of the day, and you really need to be careful about, are you going to overstay and get caught and perhaps give up a lot of what you made for the day? So aggressive traders will hold a trailer and obviously get lucky on that trade if they do. And I had thought at the time this 40 to 30 area was paid for sure. And then anybody has a trailer that wants to go below that, that's the good fortune part as we sink right into the close. And there are times where you'll come into this area and bounce right back up and take everything out. So you don't know until, or at least I don't know until hindsight. But this is a little review for myself of the things that I was looking at. And this was at 72 retest, which was the overnight high. That's why that was an important idea for me. And here's some sigmas, and this is an RTH chart. And I do this both with RTH and with Globex. And sometimes I find one is cleaner than the other, and I like the chart better. And so, I'll focus on that. And normally I will also have Orbo trades described, but they've been taken off this chart so that you can see it a little more clearly. And obviously the first level, second level, the orange, and then obviously the third level. So for Sigma charts, I also have a longer term line. This is a 3-minute chart, and I have a 3-minute rain line on that. Below it, longer term is going short side, above it going long, and then a smaller, a shorter duration slope line that you're going to cross probably over and on. And then here's your AVWAP. So this is very helpful, but it's never going to be precise, and it's not the only thing I look at. But I have interest in this as one of my studies, certainly. Very, very helpful. And this would be the same chart, but with that first RTH bar, this is a negative bar, and a breakdown. And some people use 30 seconds. I like the 3-minute. There are other sizes I use, like the General, very Hamsey. use a little bit longer duration. I like this, and then kind of see if it gets confirmed with the larger denomination. This one did not, because the larger denomination stopped here, and then we came out the top. So this sometimes will help you if you're a more conservative trader. Say, well, make sure I'm paid by the time we get to the larger level, and then it comes right back up, and the chop and the chop, and then it starts to take off and build a little momentum. And then the rest of it we've already talked about, but you can see just how important things are, like the rain line, and then obviously the sigmas. And I try to stay aware throughout the rest of the day of this bar. It's not the only thing that's important, but it is helpful. If we get above it, we need to stay above it. And then once we sink back into it, then we know we're underneath the rain line, or underneath a VWAP, or underneath these averages. And now, you're basically losing steam to the upside. And all these traders who thought they had a home run going into the weekend gave it all right back. Very tricky trading the end of day, and normally I do not trade the end of the day. I don't want to work all day and then give it back because I make a stupid move, and you know that's no fun. Been there, done that. And here's a look at different type of bars that with a little bit cleaner look, and with swings on them. And a chart like this helps me to see levels that are important. And here was that break at lunch right here, and you can see it. We'd had to push up, double top. We came down, we held. Remember, we talked about holding that 70 area. As long as that 70 area held, longs were in control. We get the retest failure leg that I had talked about, I think on another video. And then on the way back, we break this and we come right back down all the way through here. And this is one heck of a swing for a lunch contra. And then chop and chop, and then the push late a little bit later into that day after we chop around, profit taking, as we said. And you note how we stop at this level. This is so helpful for me to be able to understand these levels. So we could not, this was the retest of the 72s. We could not break into the next box. 90 held as resistance. And then we came right back down into the close, and here we are. And then this will be the an end review of obviously the chart that we started with. We can see the 2-day range, and we ended back here at level 1. So for purposes of starting next week, I already know, depends on what they do overnight, but I already know that this is the middle pivot between that 914 and 836. So I'm going to be looking one side or the other, step by step, as things evolve. And normally I do not play overnight, like Sunday nights, or for that matter, most nights. But I try to keep my head in the game and take a look at it. The chart, the system chart, is a theoretical ladder. And these levels are already in stone. You simply read them, and you read where you are. So by the end of the day, we've now come back and I've adjusted the circles, and these are manually adjusted by me. And I'm saying to myself, okay, so we know that 806 area was an important area that I showed on another chart, on a yearly chart. So we know that that corresponds with this. This is our base support down here for now if we break this box. And then obviously the next level down here. And then we adjust the ladder accordingly. So this red circle we had earlier up here, and even up here as we got here. And then we slid back down. So these have all been adjusted. And usually I only have like a yellow circle just on my charts. I'm doing this to help explain where we can see potentially the supports and the resistance that need to be broken before anything else happens. And I call this my 2-box system. Support, resistance, middle pivot until proven otherwise. And normally, if we get a 5-box move, that's a lot. Normally, a 4 to 5 boxes, and it's all predicated on the size of previous day or previous days. But for purposes of normal transactions, you're thinking maximum 4 to 5 boxes, and then you think about some kind of a contra. So if we start here, 1, 2, 3, 4, we know as we approach here, that should be our resistance and looking for a trade to come back the other way. So I hope this explains a little bit more to those of you who've shown some interest in what I do. Hope this gives you a little more insight. It helps me to review like this, and I hope it helps you too. Thanks for watching and listening. Hope you have a wonderful weekend and stay out of trouble.